Welcome everybody to the second annual Property Tax 101 workshop. This is really just to help people understand a little bit more about how property taxes work and what they go to fund. And then we'll also explain the statements that you guys got last week, as those were a little bit confusing too. But we're going to start out with actually a couple of questions to see what people know about property taxes. So the first question is, when you or your escrow account pays your tax bill this spring in 2024, so in March 2024, what year valuation is that paying for? So it's a bit of a trick question. So actually the answer is B, the 2022 valuation year. What valuation you receive in a given year is actually about an 18-month delay and doesn't come into account until the fall of the following calendar year. So your 2022 valuation is used to determine your 2023 fall and 2024 spring taxes. And so that's how it works. It's an 18-month delay. So we'll go ahead and move forward. What organization or body of government gets the greatest portion of property tax? I won't call on anybody because that's mean. It's actually A, the school district. So we'll go over the percentages here in a little bit, so I won't spend too much time on it. But do you want to go ahead and advance? What percentage of your property tax goes to the city? So if the majority goes to the school district, what portion goes to the city? 5%, 10%, 15, or 35 and 50, it's 35%. That's okay. And then is property tax the same in all states? And the answer is no, it is not. And we'll talk about that too. So we did receive some questions as well through the registration process, and we'll try to answer those as we go. But there are a couple that I don't think I'll cover in kind of the normal course of the conversation. So I'll make sure to circle back to those at the end. All right, let's go ahead and move forward. There are a couple of terms to know. The first is that the tax levy is the rate at which property owners are taxed. So that's really important because a lot of people get their valuation from the city and they think that that automatically means that their taxes are going up, and that's not true. The tax levy is the rate at which we are charging, and the consolidated levy rate is the rate that all of the taxing entities in any given body or area are taxing. So in our area, that would be the City of Waukee, the school district, the county, the state gets a portion, any hospital bodies. For us, there's also a cemetery. So there are a lot of different entities, community college, those kinds of things all get a portion. So we'll talk about that too. The assessed value is the value that you get from the county assessor's office that tells you what your property is now assessed at. It's not necessarily market rate, right, in terms of what you would sell your property for, but it's trying to be close. It does play a role in determining your property tax, but it is not the valuation that is actually used in determining. And so we'll talk about that as well. So your valuation is the taxable value of the property, which is actually less than the assessed value. So we'll cover that too. Okay, so the first big thing, where do property tax dollars go? So for every dollar that you pay into your property tax payments, about 50% goes to the Waukee Community School District, 37% comes to the City of Waukee, 9% goes to Dallas County, 2% goes to the area community college, and then there are other bodies. So you can see cemetery, state of Iowa, other agencies, et cetera, that all get a portion. So that is how it's calculated out. And each year, each one of those bodies determines their tax levy. And so those numbers do change, but the vast majority of that stays pretty consistent. In any given year, we are somewhere typically between 35 and 39% of the total taxing levy. Where do taxes go once you pay them? So that 37% that comes to the city of Waukee, what is it used to fund? Well, that goes 62% of our general fund revenues are funded through property tax. So our total budget in terms of our general fund, 62% of that is funded through those property tax dollars that come from residents or commercial businesses, multifamily, et cetera. A portion comes from transfers between intergovernmental agencies, 10% from licenses and permits, and then various other things. So that would be things like building permits or your various licenses, like your pet licenses, et cetera, all get thrown into the general fund levy. And that funds the vast majority of our general fund budget, which covers pretty much everything outside of infrastructure, really. So it covers street maintenance, sewer maintenance, water maintenance, gas maintenance, not necessarily the costs of the gas itself, not necessarily the costs of a new road. There are other things we'll talk about later, but planning and zoning, city planning, city administration. The biggest portion is for public safety, and so we'll cover that as well. Police, fire, EMS, and then recreation, obviously, parks and trails, library, et cetera. So all of that goes to fund. So in terms of the general fund revenues, so that's 62% and that comes from property taxes and the 10% from other licenses and fees and the transfers, et cetera, that we just talked about. How does that get spent? Well, almost 60% is for public safety. That includes police, fire, EMS, also building inspection, which people don't necessarily realize, but obviously making sure buildings are safe for habitation is part of safety. And so that's in there too. Recreation is 21%, general government is 10%, public works 6%, and community development is 5%. So that's how it gets split out. A lot of times people will ask us, how do you determine what gets spent where and what gets priority? For us, typically in any given year, this is about what our breakout is. It varies a little bit, but typically 55 to 60% of our general fund goes towards public safety, which is sort of foundational to any city government and what we're supposed to provide. That is primary. Additionally, staffing needs. So as we're growing pretty significantly here in Waukee, we need additional staff in order to make sure that the roads are maintained effectively or that we have enough people to do building inspections. Those kinds of things get a lot of priority and consideration as well. So how are property taxes determined? That's a big question, and I am really sorry that it is not easier. It should be easier. It should be a pretty simple math problem, and it's not. So we'll walk through it. So the property tax assessment process is actually regulated by Iowa State Code. The City of Iowa we don't control the assessment process that the Dallas County goes through in order to determine the assessed value of your home. We do not control the process by which property taxes are calculated. None of that is really determined by us. What is determined by us is the tax levy at which we're going to, the rate we're going to charge. So that's the portion we do control, and so we'll talk more about that. Reassessment happens every 2 years. So every 2 years, your assessed value goes up on your property, most likely up. I shouldn't say up. Sometimes theoretically it could stay the same, but in general, right now, valuations are going up. And we'll talk a little bit about how those are calculated. So the assessor uses multiple approaches. There are 3 different approaches. Thank you for kicking the air on. I'm a little warm. The county assessor estimates the assessed value of your property based on a blend of approaches. So the first one is market approach, which is sort of the most common that you would think about, right? As properties around you get sold that are comparable to your home, or if your home is sold, obviously there's a market impact in terms of what value your house should be assessed at. There's also a cost-based approach, which says, what would it take in order to replace your home? Basically, as you look at building materials and all of the things that would go into that. And then an income approach. So for example, if your house were used as a rental property, what kind of income would it generate? Those three methods are blended together to determine the assessed value of your property. So it's not an exact one-to-one between market values of comparable homes, but it should be somewhat close theoretically to what you would expect to see to a comparable home in your neighborhood. It's really important that people understand, though, that the assessed value is not the final taxable value of your home. So if your home increased 15% last year and the valuation you got, which a lot of people did in Waukee, anywhere between 10 and 20% was pretty common last year. That doesn't mean that the taxable value of your home went up 10 to 20% necessarily. There is a thing in Iowa called the rollback, which means that through the state determines what percentage to roll back the value on your home in order to prevent the growth in assessment more than 3%. So you got an increase last year of say 15%, but the rollback percentage went from 54% to 46%, which means it rolled back almost 20% of the value of your house. So actually, if you just look at that and nothing else changed, taxes would theoretically go down this year. So even though your value went up, because this rollback is then taking a bunch off the top. And we're going to work through a math problem here in a minute as an actual example. So I know that's confusing. But there are a bunch of components that get included in that in order to make sure that property values, the taxable values, are not actually increasing too significantly on a year-over-year basis. Okay, so this is a lot of numbers, but it goes to show you the column that's highlighted in red from fiscal year 95 or valuation year 93, the residential rollback was 68%. So it's gone down over time, and you can see for this year, fiscal year 24, the current year, which was valuation year 2022, the residential rollback was 54.65%. So 54.65% of your home value was basically lopped off the top before determining taxes so that you didn't have to pay on the whole value. For the next year, fiscal year 25, which is determined by last year's valuation in 23, it actually goes down to 46%. So again, another basically 10% gets cut off of your assessed value before even applying the tax rate. So there is an assessment rollback that happens. So now we'll work through an example because that's all very confusing. The assessor values a property at $300,000. Last year, if you apply the 54.65% rollback, that means that there's $163,950 in taxable value. So the good thing about that is that your home is still assessed at $300,000. So if you go to sell it, right, it's good for you in terms of having a reasonable assessment that is appropriate to a market valuation. However, you don't get taxed on that whole value. So that's an important consideration. So in this current fiscal year, the tax rate was 35.55 for the consolidated levy. And so the total taxable bill would be $5,828. But if you have the homestead credit, you can subtract a portion of that or any other credits. There are credits out there for military or veterans, for seniors. There are a whole bunch of credits out there. And so I encourage you to look. The assessor's website does have them listed out there. So that actually further decreases the tax bill to $5,656. So again, you're not taxed on that full $300,000 value. In the new year, go ahead. That's okay. So what the city receives, is a portion of that. So we talked earlier about how that full tax levy does not come to the city. 37% of it does. So out of that $35.55 as a consolidated tax rate, the tax rate to the city is $13.05, which means the city is eligible for $2,140 or a total of $2,076 after the credit or whatever other credits you're eligible for. That means 2 equal payments of $1,038 per year. So we're going to come back to a couple of examples here in a minute to show growth over time and what's happened to the actual tax value. But we'll talk a little bit first about how does that $2,140 translate into city services. So we talked earlier about how 58% of that is for public safety. So you can see out of that $2,148, $925 goes to support police, fire, EMS, building inspection, monthly cost of $77. Public Works is $83.39. The next biggest portion is really culture and recreation, which is mostly parks and recreation and libraries. And that's $343. And then general government is $168. So your total taxes paid are down at the bottom, and the monthly cost comes out to $179. And we like to put that into a daily number because I think it makes it more real. $179 equals a daily cost of $5.88. And that is, as I am well aware, less than the cost of my coffee at Starbucks or any of the other coffee shops in town. I'm not judging there. Or Heather, who put the slides together, likes to equate it to the cost of 2 tacos. So we have another example there that kind of shows it in different formats, but basically it's less than the cost of your lunch every day. And so for the services that are received in terms of an entire public safety staff and team and fleet of vehicles, for trails, parks, the library, et cetera, having Public Works that plows the roads and maintains all of our infrastructure, et cetera, we think that's fairly reasonable, $5.88 a day. But a lot of times we get the question, how does that compare? And so we do want to put it in terms of the entire region and just kind of show you where we are relative to the entire region. This is actually an efficiency measure. This is not where we are compared to the entire region in terms of our tax levy. We'll cover that in a minute. But this is an efficiency measure. It says based on our total valuation and our population, what's the per capita amount? And we're kind of right in the middle of the pack. So if you look at Indianola at $40,000 per capita and Clive at $94,000 per capita, they have a lot higher commercial valuation than we do, we're businesses. Then you sort of get to where we are right in the middle at $58,000 per capita. But I'd rather focus on the next slides that show where we are in terms of our levy relative to others. So on the left-hand side, all of the Dallas County communities, cities, it shows where we are in the current budget year, the 23-24 budget year, relative to the other Dallas County communities. We're at 1305, or roughly the bottom third, relative to the entire set. If we look at metro communities instead, we're sort of a little bit above half. So most of them float somewhere in there between $10 and $15. But I think what's really important is then also to look at that consolidated levy, because you're not paying 1305, you're paying the 3555. So where does that stack up? And this is where. So it's sort of below halfway, but the vast majority of communities across the entire region are paying somewhere between $33 and $39 per $1,000 of taxable valuation. And we're at the kind of the lower portion of that at $35.56 in the current year. That includes, obviously, as we talked about, city levy, school district, the county, again, the state's portion, the community college, anything related to the cemetery and so forth. So there are a lot of components within that that make up that 3556, but that's where we are. One of the other questions we get regularly is, when are you going to decrease my taxes? We actually have decreased the city levy 4 times in the last 5 years. So we've decreased it by 35 cents. And our goal is to decrease it another 10 cents this year. So that will make it 5 times in 6 years for a total of 45 cents. On the consolidated levy, that has been decreased by 74 cents in the last 5 years. So multiple times by all the entities kind of across the board. And so for the most part, organizations are trying really hard to offset any valuation increase that residents or businesses see. If you see a valuation increase, we're trying to offset that in terms of our levy. However, it is important to remember that we're getting new valuation all the time, right? So Waukee actually had $893 million in new valuation last year. That's new businesses, new homes, et cetera. And so those get taxed too. So obviously it doesn't mean that our budget goes down. It means that we're trying to offset any increase you see from a valuation perspective. So I've sort of covered this, but I want to be really clear that there are multiple components that cause taxes to change. The first is the budget of the taxing authority, right? So we set our budget, the school district sets their budget, the county sets theirs, and then we have to consolidate it in order to determine that consolidated tax levy. The total value, obviously in the taxing unit, changes things in terms of what happens with tax changes. And then the taxable value of any property after the rollback also has an impact. So all those things can go up or down. So a lot of times when people get their assessment statements and they say, well, my valuation went up, that automatically means an increase. Any one of these things can change. The rollback changes every single year. The tax levy can change every single year. And so we just want to always remind people that there is a lot that happens between when you get your assessment and when taxes are paid that actually tries to offset all of that. Okay, so I already answered this, but we'll go ahead and do the question again. If your tax assessment goes up by 10%, do your property taxes also go up by 10%? And the answer is no. Property taxes may go up, but 10% increase in valuation does not equal a 10% increase in taxing because of all of those factors we just talked about in terms of the rollback kind of decrease that happens, the levy changes, et cetera. So we're going to do a couple of examples. And again, there are a lot of numbers on this page, so I apologize. So at the top, it has the calendar year of assessment, and then the fiscal year taxes are paid. So we talked about how there's that 18-month delay, right? So your calendar year 2019 assessment is paid in fiscal year 21. And so in this example, your assessed value was $337,830 in 2019. And assessments happen every 2 years. So I want to highlight that there's the assessed value is the same in 2019 and 2020. And so it doesn't change for 2 years unless your property is sold. So, or for example, if you did a whole new addition onto your house or added a pool or something like that, those kinds of things can change your assessment, but otherwise your assessed value is good for 2 years. So in this example, the tax rate went down, but the actual property taxes paid went up. And that's because even though the assessed value is the same and the tax rate went down, the rollback actually went up. And so it caused an increase in taxes in those two from year to year. So about a 2% increase. 2021, value went up from 337 to 353. And then in 2022, it went up again. And that's because there was a sale. And so there's actually an increase there that happens. So each of those years, the valuation went up 4.65 and 12.8%. The tax rate went down pretty significantly in that first year from 36 to 35.49. And taxes went down. And then the second year they went up. And there's two things that happened that year. One, the rollback changed. And two, the tax levy changed. And so the number did actually change. So again, there are all of these things that go into it. At the end of the day, when we look at calendar year 23, so there's an asterisk by this one because this is not set yet. We're right in the middle of our budgeting process. We have hearings on it starting next week. The property value, this exact same property value, and it is a real home in Waukee, went to $461,000. So it went from under $400,000 up roughly $64,000. So the valuation went up 15.6%. The tax rate is projected to go up, not because of us, but the property taxes paid are actually going to go down. And it's because the rollback went down from 54 to 46. And so all of those factors are included in the assessment. And we try really hard to make sure when we're thinking about property tax levy increases or decreases that we're being thoughtful about this and we're offsetting as much as we can. So over these 5 years, the valuation increased $123,000 on this property, or 34%, 33.7%. The taxes went up 12.6%. They went from $6,700 to $7,700, which I know sounds like a lot, but if you think about consumer price index or proxy for inflation, went up almost 20% over that same time. And just like everyone else, the city has to pay more for materials when we do building projects. Cars for our fleet vehicles have gone up. Obviously, public safety and public works have fleet vehicles. Staff, obviously, we have cost of living adjustments, just like every other employer. So all of those things are included, but the taxes paid did not go up as much as inflation, and they only went up about a third of what the valuation increased. So again, the valuation up 34%, taxes paid went up 12.6. So it's not a one-to-one ratio. And I think that's hard to really understand. I work in this every day, and I feel like I sometimes I struggle with it too. So on the next example, we'll do this one a little bit faster because it's kind of the same structure, but you can see that from 2019 to 2023, the property value is increasing from $173,000 to $223,000, so $50,000. This is for an older home built in 1986, so it's much older than the previous example. It was also sold, and so you see that valuation increase again from 21 to 22, like we saw in the last one. But over time, so the same issue, the valuation has increased 33%. Taxes paid up 12%. And for the most part, most years are pretty small in terms of a difference. So 2019 to 2020, we go up basically $75. The next year up $56. The next year is a little bit larger bump. And that's, again, that change not only in valuation, but also in the rollback. And then this year, a pretty modest change. Given everything that's going on. So there are a lot of factors that go into it, and it is a pretty much standard state process. One of the things that I do get asked pretty regularly is how can I challenge my valuation? There are a couple of things I just wanted to comment. There are a lot of different components to that, but there are forms that you can submit if you contact the Dallas County Assessor's Office. They have a review board that hears out challenges to your assessment. So you can actually do that if you, the forms actually I think are even available on the Dallas County's assessor's webpage. In terms of any of the taxing entities' tax levies, so the city, the school district, the county, et cetera, we hold public hearings on our budget. We hold public hearings on approval of the tax levy, and you can always come and speak at those. So there are a lot of different ways to have an impact on this, but the biggest component impacting this year's and a couple of other years has been the rollback. That's something none of us control. It's mandated by the state. So the parts you can have an impact are on our challenging your assessed value. Although I'd be careful with that because you want your value to be representative of what you want for a market value, but you can challenge that. And you can also speak with any of the taxing entities too about their tax levies. What's interesting is that taxes, the property tax structure is not the same across every state. However, what we see is that the cost to run a city are pretty similar across all states. And definitely within our Midwest region, there's a lot of similarities. And so if you look at the general fund revenues and expenses for cities similar to our size, you can pretty much see fairly consistent values across. So we've provided here examples of city, obviously us here in Waukee, but also Missouri, Illinois, Minnesota, Wisconsin, and Nebraska. And the icons on the top are the number of people those cities have. So we had, at this time a year ago, we had 26,000 people. Liberty, Missouri is 30,000. Lake in the Hills, Illinois, 29,000. Chaska, Minnesota, 28,000, if that makes sense. And then the bars show you what their general fund expenses are. So ours are at this 22 million. We're at 22 million for 26,000 people. And so if you go across, you have Chaska, Minnesota, for example, that's at 24.5-ish million for 28,000 people. Or La Vista, Nebraska, which is at 20 million for 16,000 people. Some of those are off just a little bit in terms of being higher or lower than us. But if you look at this in general, it's fairly similar in terms of what it costs to run a city, to provide the public safety, to provide for parks and recreation, to provide for public works maintenance. All of those things are fairly similar within our region. What varies is how that's funded. So here in Iowa, the vast majority, we talked about it earlier, 62% comes from property taxes or licenses and fees. In other states, they have a different structure. Some are much more heavily funded by sales tax. They'll have a local sales tax, not just state or national, or they'll get a portion back from the state. So state aid, basically, they'll get a portion back from the state for their tax supplement. Local restaurant tax, lottery funds. There are a lot of other states that make much more intensive use of franchise fees than we do here in Iowa. So those are fees on top of your utilities that you would pay. So what I always try to caution people is look at it apples to apples. So what's the total amount of taxes being paid into the entity versus our total? Chances are residents in these states are paying a very similar amount. It's just not all in property tax. They're paying it through restaurant taxes or operational sales tax or state aid. All of those things are coming out of pockets too. It's just not a direct line of sight like you have when you get your property tax bill. So I mentioned we're right in the middle of the budget process. We're actually not. We've been working on the budget since, November earlier for our lovely finance staff. But as a council, been working on it since November, and we have to have it filed by the end of April. So we're much closer to the end than the beginning at this point, but this is the time definitely for public comment. And so next week we have a public hearing on our budget and the tax levy. That will be on Monday night at 5:30. And then a second hearing on April 15th. And then they're due by April 30th. So that's the process right now that all of the entities are going through. I want to spend a couple of minutes on the truth in taxation bill or statement you got last week. And I'm sorry, I have to put truth in taxation in quotation marks because there is nothing about this statement that is clear or transparent. And so I wish it was. I wish it actually told you exactly what you were paying and where it was going. It doesn't. So I'll walk through this a little bit because I know it was confusing. So what residents received last week, which came out from the county, but the form was actually mandated by the state. And so every county in Iowa had to send out the same form. And so unfortunately, we're all sort of beholden at this point. So the portions on the left in the blue boxes are the current property tax revenues we're receiving and the rate. So at the top is the Waukee School District. In the middle is Dallas County. At the bottom is Waukee City. And so you can see the actual tax dollars received and the tax levy rate. The middle in the red column is the effective tax rate. And that's just thrown in to extra confuse people. It's what would the tax rate be if we kept the exact same dollars? So that $23.2 million that we received in general non-agricultural levy last year, if we received that exact same dollars, but on our new valuation, which remember went up almost $1 billion, we would be at 1212. The issue is we have additional funding needs. So as a body, it's how do we offset any increases for you, but also decrease the tax levy and still maintain what we need. So we'll talk a little bit about what the increase in funds for this year are going to in a minute. But on the right-hand side, in the yellow boxes, is the proposed property taxes. And that's what will the body receive in revenue dollars with the proposed tax rate. So do you want to go ahead and advance? You'll see the school district is basically the same, 17.8. Dallas County goes up almost 62 cents this year. And then the city of Waukee is actually decreasing their property tax levy from 1305 to 1295. So remember I mentioned that we've decreased our levy 35 cents or 4 times in the last 5 years. And so this will be our 5th decrease down to 1295. The rural levy, the ag levy is staying the same in Waukee. On the back of that truth in taxation statement, it actually tried to summarize that for you. The problem was it didn't delineate between the school district and the city. There were 2 different lines that said Waukee. We're not double dipping. You're not paying us twice. The top one is the school district. It equates to the front of the statement. The middle is Dallas County, and then the third one is the city. And then if we go forward, there's actually some problems with that because it doesn't include any of the other taxing authorities. It doesn't include the rollback, which shows actually the decrease in terms of the taxable valuation or what you're paying. So it doesn't include the increase in your property tax valuation that you probably got last year. So none of that is really clearly laid out. What we would prefer is if there was a statement that came to you that said, basically, this is your valuation this year. This is what you're paying to everybody. This is your new valuation, and this is what you're paying to everybody so that you could clearly see, okay, my value went up, but this tax went down, this one went up, and this is who I call about that. We would actually love it if it was that clean because it would honestly be much easier for everyone to understand and much more kind of faithful to the truth of what's happening. But this is what we've got. So hopefully that's helpful in terms of an explanation. So we're going to do that example again, but with the change. Obviously, rollback went down, and so that takes even more off the valuation. But with the tax levies, ours went down, Dallas County went up. So what does that all do at the end of the day to your taxes? And it's going to vary. It's going to vary by property. And so it's not going to be everyone's, but this could be sort of the formula that you use to figure out what your taxes are going to be for the 24-25 season. So last year, right, you have that valuation of $300,000. It went times 54%. So again, your taxable value was the $163,950. And this was your tax, and this was your tax rate or your tax dollars, $5,828. In the new year, we're assuming a 15% increase because, again, a lot of residents received anywhere between 10 and a 20% assessed valuation increase. So we're assuming 15. So we went from 300 to 345. And now the rollback is 46%. So you can see that over on the left. So now taking that 345 times the 406 or 46%, sorry, too many numbers. I'm misspeaking now. But now the taxable value is actually even lower than last year because of that rollback. So even though your value went up. So you go from 164,000 almost in taxable value to now under $160,000 in taxable value. And the new levy rate went up 35.55 to 36.07, but for this same property, the taxes would go down. And this is just an example. And not every property in Waukee is going to have the same situation. If your property went up 20% last year, chances are you have a slight increase in terms of your taxes this year, but it won't be anywhere near that much. Just as an example, this is real and not just an example we made up. My valuation went up 14.8%, 2022 to 2023, and my taxes are going to go down 1.8%. So it is real in terms of how the math works. I promise we're not making up examples here. So if you have any questions about that, please let us know. We're happy to address them. But this is what's happening with the new taxes that we're proposing for 24-25. So what are we spending that on? I think that's always a valid question. The biggest component is actually, so we did just mention this. Now I've said it like 4 times, but I'm going to say it again because it's important. We cut taxes again this year in terms of our levy rate. We're trying to do it. It's actually our #1 goal in terms of our priorities around the budget every year. Sometimes we can't make it work just in terms of what we need to do, but we have 5 out of the last 6. So we're pretty proud of that. So the biggest component of what we need to accomplish with those additional dollars between now and next year. So I mentioned we're going from like the 23.3 million in general fund revenues to the 24 point something. Almost all of that is going to staffing. So we are building a second public safety facility, much larger than our current, which will house our police department, but also half of our fire department, fire and EMS. And so we need to staff up in terms of our fire and EMS personnel in order to staff a second public safety facility. That's critical from a response time perspective, from an overall management of care for our residents. And so it's really important. So 8 fire positions are being added between now and next June. We're also adding a traffic signal technician. We hear a lot about traffic signals. We're trying, I promise, traffic signal technician and a traffic engineer as well. And then pretty much every year we add 2 police officers in order to maintain our appropriate ratio for public safety relative to our population. In terms of our infrastructure, and the majority of this does not come out of the general fund dollars. These are general obligation bonds and local option sales tax, et cetera. So we'll talk about that. But there's also infrastructure that we're planning for, and some components of this do come out of those same dollars. It's T Avenue and Douglas Parkway. That is going to be the home of our new public safety facility, and so they clearly need more than a gravel road. So that's actually in process. Traffic signal turn lane conversion on Hickman. We finally got the DOT to agree to allow us to have flashing yellows for left turns. And so hopefully help continue to smooth that. And then beginning to work on University Avenue extension. Phase 1 is mostly grading. So that's preparing for the new street that's going to be connecting through from where it ends today at Warrior over to 6th Avenue. So we'll be doing a lot of grading work over the next year. And then completion of our new water tower, which I know a lot of people have seen going up and we're very excited about. Parks and are obviously a key component. Again, not all of this comes from general fund revenues. Local option sales tax helps fund these as well as GO bonds. But We have 2 new parks coming online in the next year, Spring Crest and Painted Woods West. I think that brings us up to 19 parks now in Waukee, and then upgrades. Centennial Park, that facility needs renovation in the worst way. And so we are replacing the playground equipment, updating the parking lot, and doing an asphalt overlay on the road that goes through Park Drive or whatever it's called, that goes through the middle of the park, which is very much needed. I drove on it a couple of weeks ago with my family and thought I was going to get swallowed in a pothole. So we will get that fixed. And then Ridge Point Park, a new parking lot, and a trail extension. So we try to balance every single year, obviously, between new and maintenance and upgrades of older facilities. That's really important to us to continue to invest in our facilities and make sure that all residents, no matter where they are, have access to recreation, whether that's trails, parks, et cetera. And the public safety facility, if you haven't seen renderings of this before, I feel like maybe you've been in a cave, but we have been putting these out all over the place because we are so excited about it and our staff is so excited about it. But this will be our new public safety facility. We've been doing grading and paving out at the site over the last year, and we're beginning the actual facility itself construction here in April, I think. So should see actual building going up here soon, which we're very excited about. That'll be open in the summer of 25. Okay, let's take a breath for a minute. I just talked a lot. I think I answered most of the questions in terms of how they're calculated and lowering property taxes, but I'm going to go through the questions really quickly that were submitted to make sure. One of them, there was just a statement about disabled veterans and property tax information. Hopefully this has been helpful. There actually is a military credit for tax for property taxes. And so be sure to go out to the Dallas County Assessor's website and search for information. If you can't find it, if you're having trouble with that, please just email us here at the City of Waukee and we can help you. Are commercial properties taxed the same as residential properties? Sort of. So the same valuation process happens for commercial properties that happens for residential properties. So the same valuation process. However, the rollback is different. So as I mentioned, for residential properties, it's 46%. For commercial properties, it's 90%. So more of their valuation is taxable. So for example, if you had a $20 million building, $18 million of that would be taxable, as opposed to the 46%, like 9.5 million or whatever that would be if it was a residential property. So there's slight differences, but the valuation is the same. Let's see. There is a question about, do we determine if property tax increases are viable and sustainable for the property tax owners? No, we do not. Just because there are so many factors that go into property taxes, and we only control one of them, and that is what the city levy is. We don't control the valuation. We don't control the rollback. We don't control any of the other taxing entities' budgets or their levies. And so the only component we control is really what is the city tax levy. And for that, we try to offset, as I mentioned. So we go down when we receive new valuation in order to try to offset that. So, so it's not really something that we can assess in terms of planning out what our tax is going to look like for the next 10 years, because we have no idea what the other taxing entities are going to do, what's going to happen with your valuation, what's going to happen with the rollback. So we just try to offset as much as we can. If you have comments or questions, please let us know anything you didn't ask tonight. And then we'll also share this out on our YouTube, this video. And so if you weren't able to watch it tonight, hopefully you can see it then or forward it to people who might have missed it. And then last, again, our budget public hearing is Monday night at 5:30. So if you do have questions, you can always come to that as well.